Big investors, insiders are panic selling their stocks right now here in 2024. You came here for the truth, so let me unveil that for you. The question is it just a one-off? Is this just an event that's been happening all concentrated in a short period of time? Or is this a signal of things to come? So we're going to look at that today. I want you to understand that you can look this information up for yourself. You don't need to see this, in this generic news articles and things. You can look that up. I have a video about that on my channel. And in fact, it's broken down two separate videos on my playlists. The first thing is JP Morgan CEO Jamie Dimon sells off $150 million of shares in a first ever sale since taking over the banking giant. So this is very clear. The guy has like 7.7 million shares. He's selling off almost a million shares. It is a significant sum. Why? Well, according to the official filing, why he's doing this is to diversify, okay? And as well as I think it was tax purposes, something to this effect. And so what he's doing is not unlike what others are doing. And you see the same deal going on with guys like Bezos selling $8 billion plus so far already this year, and other big names in these industries that are just producing an endless supply of capital, it seems. And so they're saying, hey, I'm going to cash out. On the Finance Friday session, we were looking at all of the different insiders from NVIDIA to pretty much any name, all these big high-flying names right now that you're seeing. The insiders at these companies are selling off. So they are the ones capitalizing on this more than anybody else because they're actually taking some of that capital in. They got it for a much less a lot of these guys get their compensation in the form of options, or they get them in the form of stock. And so they can reap those rewards at certain levels, and they're doing that. They're cashing out. Where are they putting that money? Where is Bezos about to put $8 billion worth of cash? We'll see. Okay. They are doing this. Like I said, I have a video on the channel. In fact, two videos. If you go to the playlists, you scroll down, you'll definitely see it right in there. Corporate insider transaction ratio. I want to make this very clear because I know there's already 72 comments suggesting that I don't know what I'm talking about, but you can see it for yourself. Okay. The ratio of insider sales to buys, readers under 12 to 1 ratio are bullish, and you look at those over 20 to 1 are bearish. And so when you look at this range, it just tells us that at this time, we're off the charts, okay? And what's happening here? Well, obviously, the prices have moved up to a great degree. And so insiders are saying, I'm going to cash out. All right. Now, they're not cashing out all their stock. Even in Jamie Dimon's case, yes, a large chunk is coming out. Jeff Bezos, even though he has a lot, he is selling $8 billion. Even for him, that's a considerable sum. Okay. Especially all in like a 2-week period. Okay. And so you're looking at this happening right now. They are reaping the rewards. They are taking advantage. So that's the chart for you. That's the data for you. And I think it's important to look at it, track it, and say, what can we learn from this? JP Morgan, one of those stocks that has outperformed many others. This is comparing the financial index. So when we look at the financial stocks broadly, compare that to JP Morgan, they have done extremely well in terms of their stock performance. They are the ones buying up all the companies that are not doing so well. They can take advantage of the circumstance. They never need to worry. They, in fact, have direct control, partially, over the Federal Reserve and their activities. So we know that. We know the history of the Federal Reserve, and we understand this. And so obviously they're going to be able to continuously manipulate things the way that they want. No question about it. you have these type of articles you're seeing all the time where Nvidia shares pop 16% after AI fueled bumper earnings. That was one example. Other examples, many like it right now. The word AI, you attach that in with your company and you will have a lot of success. But I want to make something very clear. So this is Bill Gross, the former bond king. And Bill Gross had this to say. He talks about his lessons learned. And essentially, he learned this very early on. What to, basically, when you make mistakes, you got to learn from those mistakes. And his parting words were this: I would make many mistakes during the next 40 years in the bond market, but none as big percentage-wise as this one. Lesson: gambling belongs at the casino. Investing requires prudent use of capital and avoidance of excessive leverage. And that's what we need to realize here. If you're going to put money into an investment, don't use leverage. Don't use this leverage. And we're talking about especially the financial instruments. When we're talking about buying a house, your own property that you are going to live in, as long as you have a considerable down payment, that's a different story. Yes, it is leverage, but it's with common sense. And that doesn't mean, hey, they allow me to have 3%, I'm going to take it. No, that is a very dangerous circumstance, okay? 3% down payment, no. You need a considerable sum to put down so your payments are reasonable. What if you lose your job? What if you don't have income for several months? What if somebody in the family is sick? You cannot be running at the red line. You're going to be in trouble at some point. Don't do it, okay? Japan's stock market hitting record levels. Now, when I see this, I know there's a problem because Japan has nothing left. Japan is a ghost town. I'm not kidding when I say this. They own the vast majority of the ETFs. They own the vast majority of the government bonds. It just like they have actual ghost towns inside of Japan. This is a matter of fact. I mean, they are at a record level. I think real estate wise, they haven't hit back to the record level yet. But remember, they crossed this initially in 1989, if memory serves correctly. So from 1989, it took all those years to get back. If you were looking at just the index, this is always the case when we have a bubble, and Japanese stocks were in a big bubble at this time. These are the kind of things that I read and I just laugh at. The more Americans that take Ozempic, the faster the U.S. economy will grow, from none other than your friends at Goldman Sachs. That's right. Suddenly, everything is fantastic. This company right here, which, take a look at that symbol of that company. Anyway, that's a whole different story. What I see overwhelmingly is the arrogance that we tend to see that comes before difficult times. We are in the roaring 2020s, aren't we? That not even locking down the entire world simultaneously can scare investors. We have gone past that. Investors simply see beyond it. And right now, today, we are looking at a time of great euphoria. The euphoria has spread just about everywhere, and it doesn't seem to let up anytime soon. Here you have one case where things are a little bit different. So you do have Warren Buffett, Berkshire Hathaway, sitting on $150 billion in cash equivalents. And so what is he doing with all that cash? Well, Warren Buffett, you remember 2020, he was being laughed at every day. Laughed at. Not just on social media from the ignorant people, but he was also being laughed at in the mainstream articles saying maybe he just doesn't get it anymore. Like, why isn't he buying Peloton stock? And so right now, you can look at his performance, the company's performance, And it has done obviously very well, outperforming the S&P 500. All right, no question about it. You got to look at performance not over a year or 2 years or 5 years or even 10 years. You have to be able to perform unless you are going to sell the whole thing at some point. But you got to perform over many decades. And very few people have done that. A lot of people have a lot of success over 10 years. They get to the 11th year, and what happens? They lose it all, or they lose a considerable sum. You got to be careful about that. You got to be good over many, many decades. Hard to do. And as Bill Gross said, you got to make wise decisions, and you cannot use leverage. You see, because that makes a loss, one loss, a big painful loss, as opposed to, all right, I can take it. Let's move on. Don't worry. I got these other ones that performed well. I'll take the loss. I'll sell. Okay. And we'll move on. Okay. That's what we need to have. Unfortunately, we don't have that. And Warren Buffett sits on the sidelines, if you want to think of it like that, which many do. But in fact, what he's doing is simply making money off the treasuries that he's buying. He's waiting for an opportunity. He wants to make a lot of money. Okay, so he's still buying. It's not that he's not buying, but he's still willing to hold on to $150 billion of cash or cash equivalents instead of having the stock that may or may not do as well as that. He's not willing to, bet on these really small margins. He wants to buy companies for pennies on the dollar and buy when he feels is the time is right. So who knows? Who knows what happens? And not every single purchase that he's made has done very well, but over time, making a few good. And he has said before, and so has Charlie Munger, have said that just a few stocks, like you buy at a couple times, you get really, really good purchases. You know that can change your life. So what we have to see right now and into the near future is what's happening with interest rates and the Federal Reserve's activities. And I believe for a lot of people, they are just pushing themselves all out there trying to capitalize on the euphoria. Just be careful. Don't use leverage. Don't go into the extremes. Don't even use options. I think a lot of people, there's this whole, they're taking courses, right, about options trading, and you won't be good at trading options. You will not be good at trading options. It is a skill that takes many, many, many years to lose at before you are good at. And that is just something that, how can I rightfully tell you to ever do something like that? I would always want you to avoid that because the losses would be too great for most people to take. You're not going to be good after you take one course on options. It's just not going to happen. Okay, so tell those YouTubers to stop. All right. Look, if you want to know about the insides and out to the financial system, you got to join my group because we get into things at the nitty gritty and help you look from a 30,000 foot view into what's going on right now today and in the depth that I just can't get into here on the YouTube channel. 2 hours every Friday. I hope to see you there at themoneygps.com/live. I'll see you then. Take care.